Hey everyone, SoFi Technologies and Upstart Holdings have been two companies of particular interest for me here in 2024 and ever since the Federal Reserve started increasing interest rates to try and slow economic growth and control inflation. So in this video, I wanted to break these two down and answer which one I think is the better stock to buy today. And I'm going to compare these two on revenue, on profitability, on shareholder dilution and valuation to determine which one I think is the better stock today. I'm also going to discuss those factors I highlighted at the beginning of the video in the changing macroeconomic conditions and how each of these two companies are going to be impacted by those changing circumstances. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with revenue growth, and comparing these two, you'll notice that SoFi took the lead from Upstart in mid-2021 and has continued that pace of revenue growth up to $2.222 billion in trailing 12-month revenue. Upstart, meanwhile, hit a bit of a roadblock in mid-2022, and its revenue decreased actually year over year rather than growing, all the way down from $1 billion down to $500 million, and has pretty much flatlined since then. If you recall, the reason Upstart revenue decreased is because lenders became very skeptical about the platform. Remember, Upstart uses artificial intelligence to make lending decisions, and it's a relatively new model. And so remember in 2022, when the Federal Reserve said that they were going to increase interest rates quickly, all the way up to 5%, that caused concern from lenders on the Upstart platform. They were fearful that folks that were taking on loans when economic activity was slowing might lose their job and then not make their payment. And they were more concerned with that impact on Upstart because of how new its lending model was. They were more confident on platforms other than lending through that platform because the legacy models of using your FICO score, your Experian history, and your credit history, all of which investors were more confident with because there was decades and decades of history for that. Whereas with Upstart, there wasn't that much history. So that caused a big pullback in lending activity on the Upstart platform. And it's still that way because lenders are still waiting to see how the company performs during an economic recession. When people are losing their jobs, how is Upstart's lending model going to perform against traditional lending models? That's a big question mark still because the company hasn't gone through cycles of ups and downs to collect that data to determine how many people are going to default, what percentage, and when they default, are they going to completely default or are they going to agree to pay back some of those loans they took out? And so until that question is answered, Upstart will still be struggling to gain traction. But once that question is answered, and especially if it's answered in a way that's positive for Upstart, meaning if there's definitive proof that its AI lending models are better than traditional lending models, Upstart's business could explode so quickly you may fail to catch up on it, and I may fail to catch up on it as well, because that turnaround could be so fast, faster than most businesses that I evaluate. I'm able to have more foresight in other businesses I'm evaluating because the factors that are coming in to boost the business, I can see them slowly trickling in from other data sources. But it would be difficult for me to see this data source trickling in because this data is not so widely available. So keep that in mind with Upstart. SoFi Technologies, meanwhile, has been growing revenue solidly and gaining market share because consumers feel that online banking is just so much more convenient than brick and mortar banking. And so SoFi is able to offer reasonable terms, offer you a $200 or $300 bonus to sign up with SoFi, and consumers try it and they like it and they stick with SoFi. They've added millions of new customers, and those customers have demonstrated they like SoFi's website and app, and they like the services. They like all the different categories of things that SoFi offers. Remember, Upstart is just primarily a lending platform, whereas SoFi wants to be everything you will potentially need in your life financially, whether you need a car loan, a student loan, a home loan, a credit card, a checking account, a savings account, an investment account, anything you can imagine financially. SoFi wants to offer that service to you. So it wants to be that marketplace where you can get everything. And so far, it's working. They're gaining a lot of customers, millions of customers, and those customers are engaging with SoFi more frequently. The next thing I wanted to look at with these two are their profitability. And they're coming at this with different perspectives. Upstart in 2022 and before, they were profitable. They were very well profitable. And they demonstrated that their business model can deliver excellent profitability at a certain scale. The trouble with Upstart was their revenue collapsed so quickly and unexpectedly that they're now generating losses. But the good thing is they've kind of reversed that. They've cut some costs and they've been improving. And so negative 175 million in trailing 12-month net income is improving for Upstart, but still they've got a long way to go before they can consistently deliver profitability. SoFi Technologies, meanwhile, was profitable in their latest 2 quarters on the bottom line. Net income was negative 178 million for the trailing 12-month period. But if I was to look ahead over the next 6 months, this figure is going to be positive. And if you look ahead the next 2 years, it's going to be very positive. And the next 5 years, management has forecasted robust earnings growth for SoFi Technologies. So the profit profile looks much more attractive for SoFi Technologies with a much more visibility into those profits. Whereas with Upstart, there is a potential for an explosion in profitability as a result of an explosion in revenue and lending activity on the platform. But that potential, it's the disparity of outcomes is so wide for Upstart. It could be a year of 500 million in net profit for Upstart in 2025, but it could also be a year of negative 150 million in net profit for Upstart in 2025. Whereas the range of outcomes is more narrow for SoFi Technologies, and those outcomes heavily skew in the positive net income category. So there's a big difference there with SoFi and Upstart. The next thing I wanted to look at is shareholder dilution. And Upstart has been actually buying back their shares. They feel their stock is undervalued, and so they've gone out and retired some shares. And so their share count is actually decreasing by a couple of million over the last year or two. Meanwhile, SoFi Technologies has been diluting shareholders, making acquisitions, refinancing some long-term debt into convertible bonds, etc. And so its share count has increased from around 800 million all the way up to 1.042 billion. So SoFi Technologies diluting shareholders, whereas Upstart is buying back shares and reducing the share count. And finally, I wanted to compare these two on valuation. Upstart is trading at a forward price to sales, of 2.934. SoFi Technologies trading at forward price to sales of 2.397. SoFi is trading at a lower valuation than Upstart, even though SoFi has demonstrated more progress on profitability and more certainty surrounding profitability. However, Upstart has demonstrated more upside potential, more explosive return potential, more reward potential, but also coming with much higher risk. For me, if I was to pick between these two stocks, I would pick SoFi Technologies. I like the certainty around profitability, and I like that SoFi Technologies will also benefit from the upside. I highlighted earlier, I would talk about the macroeconomic impacts. One of the things that could happen, like I mentioned, is an economic slowdown without a recession and a return to growth in 2025 with lower interest rates. If that's to be the case and investors and lenders feel comfortable that a recession is gone, like the odds of a recession is minimal, less than 10%, then there would be an increase in Upstart stock price more so than SoFi Technologies. So Upstart is more correlated to the business cycle. If there is to be a recession, Upstart's stock price will decrease much more than SoFi's stock price will decrease. At least that's what I'm expecting. That's what the data tells me. And so the upside is much better with Upstart, but you get more certainty around profitability with SoFi. And that's why I would pick SoFi over Upstart, because I like that narrower outcome likelihood. I don't want that wide disparity of outcomes when I'm considering an investment. But if you're an investor that likes that greater risk profile, then Upstart might be right for you. But for me, right now, I like SoFi Technologies. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.